This is, everybody can do this. It's very simple once you understand the basics. Hey guys, what's going on? This is Mina. So in the past couple of videos, we spoke about money, how it's created, the banking systems, a bunch of things like that. So if you missed those, you could watch them somewhere here. Click on them. I think they're very useful. But watching those videos, I think we all can come to a conclusion where we really need to take full ownership of our money. You need to understand where it goes, how it's made, and we need to invest. So you've been hearing all over the news, invest, this guy invested that, this guy made so much money in investments. So let's just be very clear. Investing is not this fancy thing where it's reserved for only the wealthy and the special amongst us. This is, everybody can do this. It's very simple once you understand the basics. So I'm gonna create this series where we start from the absolute bottom and we work our way to the top. So you've heard a bunch of terms on the news, people are talking around you, like ETFs, asset allocation, I don't know, PE ratio, PB ratio, all these fancy terms. My portfolio isn't doing well, all that stuff, and you start to pull back and you feel, let me just leave that to the professionals. I promise you, none of that is difficult. It is very easy and we'll go through it together. Just invest a little bit of your time to understand these things. You see what I did there? No? Okay, we'll move on. So, number one, investing. What is investing? So we'll start by the what, and we'll go to the why, which is why do I really need to invest? And we'll end up with where. So what are the types of investments we can do? What are the asset classes and things of that nature? So let's just get right into it. Let's start by what is the absolute basic idea of investing? So I just came up with this little thing. Investing is putting a resource, so a what, into a thing and expecting a positive outcome. So you're investing something into something else, expecting a positive outcome. Let's just do an example of that. So a resource, that could be your time, that could be your money. So these are resources that you have. You can invest them in either, like, let's say real estate for your money, or like a book, okay? And what is your positive expectation? So you're expecting either more money or more knowledge. That's it. That is basically investing. You're investing something into something else to expect a positive return. So in this coming series, we're gonna focus more towards financial investments, which is investing money, and we're gonna talk about where we can invest it and what sorts of outcomes we can expect with those. All right, so we covered what is investing. Let's now go into why. Why do we actually want to invest? Like, you want to save your money. I could hear you going back there, no, I just save my own money. First of all, like, good for you that you're saving money. Second of all, shut up. It's not about saving money. You will see now that inflation will eat away, will steal your money literally if you just save it. Let's just use some examples here with some actual numbers and we'll see what's going on. All right, so we have three different people here. We have this top hat wearing gentleman, Jeff. We have Mike right here, and we have beautiful Stacy. So let's just assume that today all of these people need $100 a month to cover their living costs. So to cover their place to live and their car and their groceries, whatever that looks like. So they need $100 every month. So Jeff here decides, okay, I'm just gonna take $100, I'm gonna shove it in a wall somewhere, and I'm gonna save it. Because I don't want to risk it. Risky investments are risky. I don't want to risk anything. I'm just going to put it in a wall and I'm going to take it out 20 years later and I'm going to be good. Mike here is he thinks about it a little bit differently, but he wants to remain very safe. So what he did is he started putting it in like a bank account, which gives him 2% return. Let's say it's just a high interest savings account or a GIC or something. We'll talk about those. So he gets 2% return annually. Stacy here, she's an aggressive investor. She knows the value of investing. She thinks to herself, no, I'm not just gonna shove it in a wall like idiot Jeff here. I'm gonna do my own thing and I'm gonna invest. So let's assume that she invests and she gets like a 6 to 7% annual return, which isn't too high, isn't too low. It's like the market average. So let's see what happens with them. So Jeff here, naturally, after 20 years, he opens up his wall and he still has the $100. He is smart. He didn't lose any money. Good for you, Jeff. And then comes Mike with his 2% annualized return, or he gets 2% every year for 20 years. He ends up with $149. So you see he had $100, now he has $149. Here comes Stacy. After 20 years with her return of 6 to 7%, she has $387. She has a whopping $387. So all these numbers look great, but we're forgetting a very important factor here. The piece of shit inflation. Inflation just is like a thief. It robs your money of its value. So let's assume a 2% inflation rate, which is pretty average for Canada in the past, I don't know, 20, 30 years. Let's call it 2%, which is a very reasonable number, and we've seen much higher. So 2% over 20 years, let's assume it's just gonna remain at 2%. The same house and car and like the groceries or like the gluten-free shit, the bougie crap that they're buying is now costing them $149. So Jeff here can no longer afford to buy his gluten-free bagels. He can't buy that almond milk or whatever the hell he was buying here because he only has 100 and that stuff costs 149 now. So he lost that difference. He did not save his money. He literally lost the difference between here because he can't buy that same stuff. Now he either has to keep working to afford the difference or he just has to cut most of that bougie stuff out. Mike here, he invested for 2%, so he's literally the same. He could just afford, after 20 years, he cannot increase his cost of living, he can't do anything better, but he basically kept the money the same value. Comes beautiful Stacy here now. She has $387. She could still buy her bougie stuff. She could spend the same exact money and buy this, and she has extra money. So she has choices now. She could buy more stuff, buy fancier shit, or she could just save and invest the rest and continue the cycle. She has more options. So that is literally why we have to invest. This is no longer a luxury or something, oh my God, it would be good. No, there's a necessity, as you can see. Either you're losing or you have to grow just to be the same. You have to grow by 2% just to maintain your same level. So it's not a luxury, it is an absolute necessity. Hey, come on, you reached this far in the video. Just 1 second, press that like button below. It's not gonna cost you nothing. And just press that like button and we'll continue on. Come on, I'll wait for you. That's it, thank you. So now to number 3, where can we invest? So we spoke about why we should invest and what is investment in general, now to where. So these are the general asset classes. Number 1 would be stocks. We're all familiar with the word. It generally means we're purchasing pieces of companies. Like you have an Apple stock, Google stock, Amazon. You own a slither of one of these companies, or others, obviously. Number 2 would be bonds. So an example of that would be government bonds. You're just lending money to the government or whoever the bond is, and there you get a certain return on that investment. Number 3 would be commodities, so like gold and silver, some people invest in those. Number 4 would be real estate, so you know people who buy houses, who sell houses, apartment buildings, commercial plazas, things like that. Number 5 would be cash equivalents, so these are like the money market funds, which is similar to the bonds, but they're very liquid, short-term debt securities where they give you a very small return on investment. Anyways, so these are the general asset classes. In the next video, I'm going to start explaining one by one, a little bit more in depth, a little more in detail. We'll dive into terms here and there, and hopefully we can get some value. I promise you again, this is not complicated in any way. You do not need to be fully 1000% aware of every single term from the beginning, but let's just start. Let's take it one step at a time. Do not be discouraged, and let's take control of our financial future. And that is it for this one. I'll see you guys in the next video.